Germany's economy in 2024 is a bit like a seesaw, sometimes going up with more jobs and improving inflation, but facing challenges too. There's a chance of slower economic growth and tough competition in the car industry. Also, the unpredictable weather and global tensions add extra twists to the story. It's a mixed bag of ups and downs for Germany's economy this year. Germany's economic journey. Germany's economic outlook 2023 is marked by a projected decline of 0.3%, influenced by factors like high inflation and tightened financing conditions impacting consumption and investment. Unfavorable developments in foreign demand have exacerbated the trade outlook. A boost in domestic demand is anticipated, driven by an increase in real wages. This, coupled with the recovering foreign market, is expected to contribute to a rebound in GDP growth, reaching 0.8% in 2024 and 1.2% in 2025. The country is also on a path of fiscal consolidation, with decreasing government deficits and debt-to-GDP ratios. Mitigation measures for high energy prices are proving less costly than initially anticipated, supporting Germany's economic recovery. Job market shows resilience, with record employment rates in Germany. In the first 8 months of 2023, employment in Germany saw a commendable increase of 0.8% compared to last year, showcasing a robust job market. An all-time high of 83.9% of the population aged 20 to 64 is actively engaged in the labor market, a notable uptick from the previous year's 83.3%. The unemployment rate, remaining broadly stable around 3%, is expected only marginally to increase to 3.2% in the coming forecast period. Despite a slight dip in the job vacancy rate, it continues to be elevated. The labor market, although easing somewhat, is projected to remain tight due to the impact of aging on the labor supply. In the first half of 2023, wages experienced a 6.1% boost compared to the previous year, leading to real wage losses. However, with higher wage outcomes, real wage growth is anticipated to have resumed in the latter part of 2023, and this positive trend is expected to persist into 2024 and 2025. Inflation in Germany eases after a peak, predicted to gradually slow down. Over the past year, the annual inflation rate in Germany has steadily decreased, reaching 4.3% in September 2023. A significant drop from the peak of 11.6% in October 2022. This reduction is primarily attributed to the decline in wholesale energy prices and the implementation of energy-related measures. The projection for 2023 anticipates the Harmonized Index of Consumer Prices, HIP, inflation to settle at 6.2%. Looking ahead, the deceleration of inflation is expected to persist, although at a slower pace, with rates forecasted to decline to 3.1% in 2024 and further to 2.2% in 2025. The ongoing wage growth will likely temporarily sustain inflation, particularly in the services sector. Meanwhile, the role of energy prices in contributing to overall HIP inflation is expected to be relatively minor, with a positive impact in 2024 as the VAT rate on natural gas is restored to its original level. Deficits decrease in economic measures. Looking at Germany's financial picture, the government deficit is anticipated to shrink in 2023, decreasing to 2.2% of GDP from the 2.5% reported in 2022. This positive shift is attributed to the gradual phase-out of COVID-19 measures, accounting for around 0.8% of GDP in 2022, and the more favorable development of energy prices. About 1/4 of the €200 billion Economic Stabilization Fund is projected to be spent on electricity and gas price breaks, supporting households and companies with a net budgetary cost of around 1.0% of GDP in 2023. Moving into 2024, the government deficit is expected to decrease to 1.6% of GDP, aided by continuing the phase-out of energy measures and robust government revenue. However, negative impacts on government revenue are expected due to tax measures addressing issues like tax bracket creep, child allowances, and support for companies. In 2025, the deficit will narrow to 1.3% of GDP. Despite these projections, state finances face a downturn in the following years as a recently announced package of measures to reduce the effect of rising energy prices on sectors has yet to be fully defined. Germany's government debt, which stood at 66.1% of GDP in 2022, is expected to decrease gradually to 63% over the forecast horizon. Germany's economic challenges in 2024. As we enter 2024, Germany, the largest economy in Europe, is bracing for a continuation of the aftermath of its recent economic crisis. News Business sheds light on 5 key challenges that lie ahead. The country is grappling with an uphill battle as its GDP growth is anticipated to decline by 0.6%, with the weight of stagflationary pressures and the looming specter of a slow recession accentuated by a downturn in manufacturing activity. Even the prized automobile industry, a cornerstone of German industry, is expected to face challenges. Adding to the complexity, budgetary constraints are foreseen, posing additional problems for households and consumers. Formidable hurdles mark the economic landscape for Germany in 2024. Gloomy outlook for Germany's economy in 2024. Germany faces a challenging economic forecast for 2024, with major global financial organizations painting a sad picture. According to the newest report from the International Monetary Fund (IMF), Germany is expected to be the sole major world economy to contract this year, emphasizing its position as a standout example of weak growth among major European countries. The Organization for Economic Cooperation and Development (OECD) adds to the concerns, predicting a significant blow to Germany from a global economic slowdown triggered by weakened trade and rising worldwide interest rates. The lingering effects of economic stagflation, experienced at the end of 2022 and the beginning of 2023, contribute to forecasts indicating a 0.6% decline in Germany's economy for the current year. The outlook for Germany in 2024 appears challenging, marked by global economic headwinds and internal economic complexities. Germany grapples with economic challenges and unemployment. The year 2023 marked a period of stagnation for Germany, prompting The Guardian to question if the country was caught in a slow recession, driven by a troublesome combination of ongoing inflation and sluggish growth. Highlighting the economic struggle, government spending declined by 0.2% in the fourth quarter of 2022, escalating to 1.9% in the first quarter of 2023. Adding to the complexity, a significant void in the economic sector left around 2.6 million people unemployed in 2023, a stark increase from the 191,000 recorded in 2022. Unfortunately, the outlook suggests that the unemployment situation may worsen in the upcoming year if economic conditions in Germany remain unchanged. The economic landscape for Germany in recent times has been challenging, with implications for growth and employment. Germany's auto industry faces tough competition from China. Being Europe's largest car market, Germany's automotive sector is considered its strength. However, despite being a hub of innovation in mobility, the German auto industry is grappling with a significant challenge: competition from China. While Germany boasts a unique mix of infrastructure, state support, skilled workforce, and industry expertise, it struggles to match China's technological and industrial prowess. Germany's automotive sector is not leading in electric mobility and appears to be on the decline. Almost 98% of cars in Germany still run on combustion engines, leading analysts to label the goal of having 15 million electric vehicles on the road by 2030 as overambitious and unrealistic. Hindered by budget constraints, Germany cannot challenge China's dominance in the market, resulting in postponed investments. With China maintaining an electric vehicle market share of nearly 40%, Germany relies on Chinese manufactured goods like battery cells. The competition in the automotive landscape presents a tough scenario for Germany's industry. Weather woes and global tensions pose challenges for Germany's economy in 2024. Germany is expected to face economic challenges in 2024, with adverse weather and climate change taking a toll. Heavy rainfall and flooding witnessed last year are likely to continue, partly attributed to the El Niño weather phenomenon. This erratic weather, causing more rain in low-lying areas, has notable implications for Germany's energy sector, especially in oil and gas production. A spokesperson from Germany's National Meteorological Service highlighted the unpredictability of El Niño, adding to the uncertainty that may disrupt the German economy. These weather challenges and three geopolitical fronts involving Russia-Ukraine, the Middle East war, and the Red Sea escalation create a scenario where another energy crisis remains imminent. The combination of weather-related concerns and global tensions poses significant hurdles for Germany in the upcoming year. Given the projected decline in GDP growth and other economic challenges, what measures should Germany prioritize to stimulate economic recovery? Let us know in the comments below. If you enjoyed this video and want to see more like it, leave a like and subscribe to our channel if you haven't already. Tap the bell icon to turn on notifications to stay updated with all our latest videos. Thanks for watching, and I'll see you in the next video.